Hey everybody, this is Jose Blasco. We are about to get started. Sound check, please. A quick hello on the chat box, as always would do. So I know you hear me and we are ready to get started. Let's do that. I will turn on my video stream in the meantime. So I position myself on the bottom right side of the corner, as always. So we are ready to get started. Very good. Thank you, Lilan. Nice. Nice, everybody. Thank you so much. So we're live, everybody. Welcome to the session. Today is June 2nd, 2021. Maka, Christian, how are you guys? It's very good to see you. Today is June 2nd, 2021. As I was saying, today is options with options. So we're going to be looking at the markets and doing some options trading, isn't it? Options give us options. So it's key to understand the market conditions, so we can use the right type of option strategy to take advantage of such market condition. And that's the beauty with options. You can do things beyond just going long or going short. You can do other things. You know, we often use relatively complex strategies such as iron condors and we tweak them, double calendars and we tweak them, and things like that, isn't it? And we have lots of fun, but most importantly, great management of risk and some performance kicking in, isn't it? Anyway, before we get started, disclaimer on the upper left side of the screen. Please read it carefully. This is important information. I am counting on you to read it all, to not to skip any word, sentence, or paragraph, because it is indeed important. So please read it carefully. How you say, man? It's good to see you as well. Very good. So looking at the various chat boxes, that's great, guys. Very good. So agenda. Hello, everyone. We just said we are simulcasting. Remember, some of you are attending these sessions from the private room that you can find using www.tradewithufos.com/live. Some of you are attending this session using public streams such as YouTube or Facebook. Again, keep in mind that every one of those different places will have different video lag. So when it comes to commenting or interacting on the chat box, please act quickly so we suffer the video lag the least as possible. And then on the other hand, the fact that we are simulcasting in private and public spaces also has an additional consequence, which is on the public spaces, the duration of the sessions is limited. Normally we shoot for 30 minutes, sometimes it's a bit less, sometimes it's a bit more, sometimes actually we'll go all the way to the end, isn't it? Especially with options, because sometimes you cannot just stop a conversation in the middle. Ahmed, how are you, my friend? It's good to see you. But normally, again, in the public streams, the duration of the sessions is shorter, where in the private room, the duration of the session is full duration. The content is the same, trading is trading, we don't have magic bullets or anything like that. We just teach you how to trade properly, no matter if it's Facebook or YouTube or the private room. But in the private room, we have more time to spend together, okay? Joanne, how are you? It's good to see you. Good morning over there. Nice to see you. So anyway, so let's begin. As always, we'll look at the market, review the trades that we have, and then go for new opportunities. Let's begin. So here's TradeStation, okay? Here's the S&P. If we look at the S&P is up today 0.25%, price traveling from the green UFO located at 419 all the way to the red UFO located at 421. Okay, that's great. Now, a little bit of a note of caution there. Okay, we were anticipating new all-time high to be produced, but careful, because today, from a climate point of view, it's candle 8 out of 9. In other words, would it be a normal thing for the market to keep going higher for another day? Yes. But what about more than one day? Well, could happen, certainly could, because those values represent a one standard deviation, which is 68.4% of the cases. But it is starting to get into the non-likely territory. Okay, we may have a breakout type of all-time high just to become a fake out. And then, you know, maybe something like that is going to happen where the market, you know, will go through this UFO, break out, everybody's thinking it's going to the moon, just to have a retracement into this UFO, and from there, now it goes. So this movement to the downside may imply a change of climate from blue to red for, let's say, 3 days going down and then back up to continue the normal movements going up as the S&P has been behaving in many years, for many years now. So in other words, let's not get too greedy at catching the all-time high breakout, because it may not last for too long. Or maybe we're going to have one of those market conditions where, the famous saying on Wall Street, which is, the market could remain irrational longer, that you could become solvent. You could remain solvent. So in other words, we may have one of those cases where statistics suggest 9 candles is a normal thing, and then the market stretches and stretches and stretches all the way. But again, while this could happen, we don't like to rely on this type of trades, because by nature, objectively speaking, they are less probable. Okay, so we like to rely on what's most probable. Okay, so keep that in mind. And obviously, with that type of market environment where the market is going higher and looking like it's going to make all-time high. So what's happening to the VIX? Well, the VIX is down by 3.41% today. So it's going down. Okay, now the red UFOs are very far. The green UFOs don't even show on the screen. So really anything could happen. When it comes to the VIX, it could go up, it could go down. Who knows what may happen? But the reality is that since the S&P, at least for 1 or 2 days, is more likely going to go up than going to go down. So in this beginning part of the session, I will be looking at opportunities where to sell options, because I would expect the VIX to go down, which is what normally happens when the markets go up. Okay, so I will be looking for this type of trade at the beginning. So for you curious out there, in case you want to rerun it on your end as well, so if you look at my settings for the non-directional scanner, notice how I have selected options to be top 50, so expensive options, and I have selected implied volatility to be greater than historical volatility. So in other words, I'm looking for as expensive as possible options, so I can sell them, because I expect volatility to drop, so I want to collect that profit in the form of negative vega. Okay, so that's gonna be my approach for the beginning part of trading today. Okay, how is it going, guys? I need to review the trades. We've been in the session for about 5 minutes. Everybody has been relatively quiet apart from the hellos. How are you guys doing? How is live? How is trading treating you? How is everything? Give me a little bit of feedback, guys. That's always super appreciated. In the meantime, I'm gonna click on team, so we're gonna start our reviews. Okay, and team, as you recall, and let me bring thinkorswim here. So we got team here. Okay, so team is a trade that is currently showing $137.5 of profit per contract. As you can see, all the expirations are July 18. In other words, this is an iron condor. Okay, this is an iron condor. Forgot to turn on the sound. Now you're good, very good. Leland, you're good. Siderman, all okay. That's great to hear, guys. So anyway, so team is an iron condor, and therefore the bet is that price will stay in the purple area from now until expiration. Okay. Last week we saw a little bit of a challenge with having price go up, okay, but then it came back down a little bit. So let's bring in Option Station Pro so we can go ahead and evaluate from a probability point of view. Yes, Christian, welcome to the room, my friend. I mean, you are you are always there in our sessions from YouTube, and today you are joining us there. So it's fantastic to see you here. Okay, I knew you were going to join us here. You told me in one of your emails, and I know you had many things in your hands. So I'm happy to hear or to see, or at least I assume that things got a bit simpler on your end, and therefore with those responsibilities under control, you now have the time to join us here. So it's wonderful. Anyway, so here's team. Okay, and again, when looking at probabilities and statistical prices for the expected range, we are talking about 87.5 to 76.22. So let's update that on the chart. Did I change that to team? No, I didn't change it to team. Sorry for that, guys. It's muscle memory. You start looking at values, and it didn't even change the symbol. Yeah, sometimes muscle memory keeps you out of trouble. Sometimes muscle memory doesn't do too well, isn't it? Anyway, 250 to 214, okay, 215, let's go to 215. So 250 to 215, that would be from somewhere here to somewhere here, okay? So in other words, we are still in a situation where, based on probabilities, we are likely to end up in the purple area, which is where this trade will profit to its maximum. It's nice to see as well, not only that probabilities suggest that, but it's also nice to see that a few days ago a new red UFO formed. And again, this is good because if price was to try to go higher, that UFO is either going to stop it for a bit before it continues, okay, or reverse it down, and in this sense give us a little bit more of accumulation of time decay, or more probability of staying in the range. Okay, so in both cases it's good, and therefore there is not much to comment on TIM, just that the fact that the trade is working well so far. At the same time, it doesn't mean it's gonna work well until the end. Anything could happen anytime, and we're gonna be ready and happy to act on it the moment anything happens. Okay, and the moment anything happens means the dotted line to surpass the solid line. If that was to be the case, then we're gonna have to act on rolling those puts. Okay, cool. Very good, very good. Nice to read what you just wrote, Christian. Wonderful. Yes, Micah, very kind of you as well to welcoming the new members to the room. You guys are the best. I love it. Anyway, so let's go for the next one. Okay, the next one we have is MasterCard. Okay, and if I was to look at TOS, so MasterCard, okay, let me compact TIM and expand MasterCard, is also a trade where everything we are using here is June 18. So this is another iron condor. This trade is currently making 45.5. Okay, 45.5. So if we look at MasterCard, we are fairly located in the purple area, more or less in the middle. It's a very similar position compared to the one that we saw on TIM. The only thing that you may notice, okay, and it's pretty spectacular to be honest, is that in this initial opening time of the market since close to 2 hours ago now, that this stock has been moving higher 2.63%. So that's powerful. Okay, that's a nice move, and again we need to reevaluate what happens from a probability standpoint point of view. Where are we at? Okay, so what do we have here? So 388 to 352. Okay, so 388 is where we are to 352. Okay, is here. Okay, is here, and therefore right now with that particular stock, so there is not much more to do. It does look like we will end up as well in the purple area, at least based on probabilities, and we do have multiple UFOs above and below to protect ourselves in case that was not to be the case. So it is looking good for the trade to continue progressing towards June 18 within the purple area. So far nothing to be done. The trade is working according to plan. Okay, so that's great. What about PayPal? Okay, so we're gonna look at PayPal. PayPal is a more complex trade, okay, because PayPal, as you can see, we're using June 4 combined with July 21st expiration. Okay, so this is a double calendar. We're using the same strikes, 230, 230 put, 260, 260 call. So same strikes, but two different expiration dates and calls and puts. So this is known as a double calendar. And, you can see, first of all, here an indication in the money. So the 260 is in the money, meaning that stock has been moving higher. So we need to take a look at what's happening there. As well as, quickly looking, I see this option trading at 4 cents, which probably with that little premium left, probably that means that we may have distorted Greeks on that one. So we may need to act and roll that particular put. We're gonna see that, okay? Siderman, you have 384 and 355 Okay, let me try that again with MasterCard. Okay, so loading MasterCard again. So it says 388 and 352. Okay, so let me show you the settings I'm using. Okay, so you saw I clicked on the settings wheel on the upper right. Okay, so do it with me, Mark, if you don't mind, so that way we confirm that what you have is like me. Okay, so in the common area, I have selected historic volatility bars 89, the options volatility source to be implied, the interest rate to be automatic, the pricing model to be jerked, soon, and stance land, which is challenging to pronounce. I'm using the midpoint and show futures data. That's not relevant, and fractions is not relevant. So take a look at that. I'll give you a second as well for you to check. I'll give you a second, everybody, as well, so you can take a screenshot. And by the way, when I say a second, I mean it's an English expression, isn't it? For sure, you have more than a second to take a screenshot. Okay, so implied options volatility source and 89 for historic volatility. Okay, and then I'm going to move to graph. Here is not relevant, and then option chain expected move calculation. I have selected pessimistic. Okay, I have selected pessimistic. That also has an impact on that calculation. Okay, and then the price updating and everything else does not have an impact. So just make sure you got pessimistic there. You had Black-Scholes, understood? Yeah. Anything that is not Black-Scholes is normally better than Black-Scholes, okay? Because, again, Black-Scholes was an amazing work. Mr. Black and Mr. Scholes won the prize Nobel of Economy on, I think it was 1985 or 1989, I'm not sure now. So it was an amazing development, mathematical development, but at the same time it was the first pass. It was the version 1 of a pricing model. So the one I'm using here, Jerk, Sun, and Stance Land. I just cannot pronounce it right. You know, it's a better one. The binomial, to be honest, is the best. Okay, you had optimistic, very good. So now when you do that, you should have the same, which is 388 and 351. Okay, so please confirm that when you can, Mark. But I believe that you should be fine like that. Okay, so so back to PayPal. Okay, let's go back to PayPal. You are with me. Wonderful. Perfect. Good one. Teamwork. Okay, so what do we have with PayPal? Okay, well, you can see that stock is trading at 263, and therefore, understandably enough, the 260 call is in the money. By the way, this is exactly the same thing that happened last week. Okay, last week when we were together on Thursday, you know, see, so this is 260 right there, right? So price was teasing a little bit above 260, and then there was a moment in time where it went below 260, and that's when we did the roll. Do you guys remember that? That's where we did the roll, because this is when the option chain showed us distorted Greeks. If not, being in the money, it would take until probably Friday, and if it's very deep in the money, maybe late into Friday, to see those distorted Greeks, okay? And we talked about the risk of being assigned, but at the same time, the fact that it's not a big deal because you are long a call. But again, we talked about all of this last week. You guys probably remember, isn't it? So we are in a similar situation today where we are above 260, okay? And therefore, probably the call is not showing distorted Greeks yet, but the 230 puts probably yes, okay? So let's go ahead and take a look at the option chain. We are currently using Jun-4, isn't it? Or wait a minute, make sure I said that right. Yeah, Jun-4. Okay, so let's take a look at Jun-4. We'll start with the puts. Looking at the 230, extrinsic value is 4. Theta is 7. Okay, so in other words, theta tells you that you will make $7 a day, and it's 2.5 days to go to expiration, but the most you can make is actually 4. So the Greeks are distorted, as you can see. So it's time to roll. Okay, it's time to roll. If we roll to the next expiration date, the 230 is going to pay 22. Okay, So we're gonna collect, let's say 15 cents, something like that. It's not gonna be amazing, but it's time to roll, my friends. So we are just gonna roll it. So I'm gonna use the 230 put, right click, create a rolling order, sell. Okay, and here it says that I'm going to be buying back the 4th of January expiration day 230 put, and I'm going to be selling a new 230 put with 11 of June expiration. That would bring in $17 of credit. So what's the impact if we do that? Well, if we go back to the analytics tool, okay, and I was to, let me duplicate what we have. So analyze, duplicate trade. Okay, so I uncheck. So the one we have cost us 9.12, right? So if now we're gonna bring in 17 cents extra, so 9.12 minus 17 cents is gonna drop the net cost basis of the trade to be 8.95. And if that's the case, 8.95, and now we are using for the put June 11, okay? So this will create a new risk profile with that particular shape, okay? Where it puts us in a good position where we are locking in basically $48 of profit that we have so far on this trade. We got theta working for us, okay? A pretty nice rate of theta actually, okay? We are moving towards the blue line, okay? And again, the range is expanding given the fact that we are adding more premium, and also the cost of the trade is less. Now the most we can lose is $8.95 because the net cost basis of the trade is $8.95. Okay. Remember, we started with 1,000 over, so by doing this roll today, we are now bringing the risk to be less. Okay. So certainly time to do the roll, and therefore I'm going to leave the $8.95 here with the roll. And I'm going to place an order with TOS. Let me do this slowly in case, you need me to do it slowly so you can follow. So notice now it shows us 18 cents. Okay. So we are buying back the 230 put that expires in June 4, and we are selling a new 230 put that expires in June 11. So we are just rolling to the next week the same put, bringing 18 cents of credit. So that should be the midpoint. Let's see if I get that. I'm just gonna try a bit less, just so I get filled for sure, so we don't waste time. For you guys, try to get the most you can. Okay. I got 17. Okay, I got 17. So yeah, so 17 is what I got here on the top. So this is a reference for you guys. You may want to try 17. You may want to try 18. If you want to be a bit more patient, you may want to try 20 and see if you get filled, and if not, you try 19, and if not, you get my point. I just went straight to get the fill quickly, so I don't waste any time. Okay, so in other words, I am exactly in this position now. Okay, I am exactly in this position now, where I have locked in. I have not locked in. This is not the right term. I have not locked in profit. This trade can still lose, but I have reduced the cost basis of the trade to be $8.95 thanks to those additional 17 cents. Okay, so that I have it, and no one can take this away from me anymore. So, what about the call side? Okay, and before I go there on the call side, please give me some feedback. I'll take a sip of water. Everybody followed me on the put side. Do you need me to repeat anything? You're probably busy putting the order in. Let me know. How is it going, guys? Okay. I guess, as expected, you guys are busy. Good or good, very good, perfect, nice. So let's take a look at the call now. Okay, so because the 260 call that expires on June 4, okay, is very close to June 4 expiration. Okay, now being in the money, again, we are probably not going to see those distorted Greeks. Okay, so here's the 260 call. We can see an extrinsic value of 7. Oh, you know what? I believe we may have distorted Greeks as well. Take a look at this. So the 260 call, okay, which is right here, has an extrinsic value of 1.04 and a theta of 0.49. And we have 2 days and a half to go. So 2 days and a half with 0.49 means that, you know, theta tells you you can make up to $1.22. But the reality is that the most you can make is 1.13. That's the 1.10. So in other words, we have distorted Greeks on the call side, which I was not expecting for today. So great. Let's roll it. Okay, we're gonna roll it to the 260 call that expires on June 11, and that call is gonna pay 6.98. So we're gonna be bringing in a nice credit. Okay, nice credit. Having said that, we're gonna lose some in this transaction because being in the money, okay, this option didn't decay as much as we would like to. So when we sold the 260 call that expires on June 4, we traded it at 370. Okay, we traded it at 370. If I close it now at 502, so we're gonna lose 132. Okay, now we're gonna lose 132, but we're gonna bring more premium from the next expiration date, which is gonna basically offset that pain and add more premium on top. Okay, so it's really all good. Just know that temporarily you take $132 of loss in the account in exchange for more premium that is, you know, to be to be in this trade with the ultimate duration being July 16, which is the expiration date of the long units. Okay, so it's all going well, my friends. Therefore, create a rolling order for the call. And notice we're doing the same thing. So we got +1 for the June 4, and we got -1 for the June 11, and that brings exactly $2 of additional premium, 197 now. Okay, 197. So in other words, we're gonna drop the cost basis of the trade by another $200, going from 895 to, let's say, 695 or something like that. And again, keep working on, you know, tweaking this trade to reduce the risk and try to maximize the profits. And you know, that's what we do. We've done that, you know, all the time. So let's do it. I'm going to duplicate the trade one more time. Same thing I did before. I'm going to uncheck. And what I'm going to do is, okay, so what if I bring in 197? So my $895 of cost diminished by 197 would now be 698. So that would be the net cost basis of the trade, 698. Okay, and my 260 call will now be the 260 call that expires on June 11. So if I do that, what's happening? So this is now the new shape of this trade. Okay, new shape of this trade, where now, you know, the most we can make is $400. In the middle is less, is 85. Okay, the risk of the trade now is 698. That's what the most you can lose. So notice that we keep adding that, and also the other thing that we're doing is that we are widening the range, because now the bottom part of the range where profits would be made is, you know, 220 something, and the upper part of the range is almost 270. So it's a pretty wide range where no matter where the price of the stock ends up in, you would end up with that profit. Okay, and by the way, this is the roll using June 11. Then we're gonna do June 18. Then we're gonna do, you know, June whatever, and we keep going, you know, until then. Okay, you tried 2.02 and you got filled right away. That's fantastic. Okay, let's do it. Let me place the order. Okay, I'm just gonna, since I got 2, I'm just gonna go with 2 and see how much I get. So I'm gonna send the order and see if I get filled or not. Okay, so far I haven't. So maybe just to speed up the process, don't do that in your accounts. Okay, in your accounts, be patient, and especially knowing MAC as reference that you can get 202, be patient. But in my case, I'm just gonna go for 195 and see how much I get, just to speed up the process, hopefully, and getting that trade filled so I can document it for education purposes and for tracking the trades and for, you know, demonstration as well, so you know how it's done. It seems I'm not being filled at that price. Okay, not in the demo account, so I'm just gonna drop it to 190. Again, when you do this at home, you need to wait, you know, at least 5 minutes each time. Don't rush it. Okay, I just got filled at 190. Okay, so I got 190, way worse than you, Maka, but it's okay. I'll take it because again, I'm doing this for you guys. So we have 895 minus 190, which is what I got. It's actually 705. So it's not 698, it's 705. This is the cost of the trade and therefore the risk. Okay, so I'm leaving this one here, and that's the one we have now with July 16 and the June 11s, you know, at the moment. So we're good. So far, all is working well. All is happening the way we need it to happen. Happy about all of this. So let's continue with the last one, and then we'll get into looking for trades. Okay, which is AMD. Okay, so with AMD, we're looking at this trade. Okay, let's take a look at AMD here. AMD is showing positive $13 of profit. Notice with AMD, we are using June 18 and July 16. Okay, so AMD is also a double calendar. We actually already did a roll. Okay, we did a roll already, but notice that we rolled all the way to June 18, as you probably remember, and therefore we still see 10 cents in one of the sides and $1 on the other side. So definitely that stock has been moving higher too, because the call side is trading at a penalty, $63 of a penalty at the moment. So you know that's why the premium is still quite high. So not sure if we will find distorted Greeks on the put yet, especially being June 18. I would say probably not. Okay, but let's try, because we never know, and it's all about efficiency, guys. So looking at AMD, we are looking at June 18. The strike I'm looking at is the 70 put. So I need to load more strikes. 70 put, which is right here, where we have an extrinsic value of 11 cents, and theta is 2. So guess what? We do have distorted Greeks, because 2 times 16, that would be 32 cents, where the most we can make is 11. Okay, so in other words, we need to be rolling the 70 put to the next expiration date. And I'm just concerned about liquidity. Oh no, it's fine. 70 put is 17 to 18 cents. So that's okay. Liquidity is good. What about distorted Greeks here? So if I look at the Greeks, it's 2 cents. Yeah, 2 cents times 23, right? That's 46 cents. And extrinsic value is 18. So guess what? The next expiration date has distorted Greeks as well. So I will need to roll to the next one, which is July 2nd. So July 2nd is telling me theta is 2, extrinsic value is 29. So that's distorted Greeks as well. So July 9, 70 option is giving me a theta of 2, and extrinsic value is 37. So 2 times 37 is 64, and that's more than 36. So no matter which expiration date we use, we got distorted Greeks. And by the way, the 16th of July, it's when the trade ends. So I cannot sell the 70 put in July, because that means I'm closing the trade. I cannot do that. So in other words, what to do in a case like that? Okay, what to do in a case like that? Well, the answer is nothing. Okay, what to do is nothing, because you don't help yourself too much by doing whatever you do. And in any case, any roll will imply very limited amount of premium. So take a look. If I do the rolling action, notice how much I'm going to bring in, 7 cents. So you're going to bring in 7 cents and pay commissions to end up on a distorted Greek position. What's the point, right? So what's happening is that we are dealing with a very wide range, and because the stock is moving far away from the 70 strike, those puts are just too cheap. So we gotta play patience, because remember, as the expiration date will approach, premiums will tend to rise. So we need to pay patience. We need to play patience. Keep watching this. So far, leave it alone until June 18, because you will make, if you leave it alone until June 18, you will make additional 10 cents and you will pay no commissions. So that is better than getting 7 cents and pay commissions. So do nothing, just wait. And in the meantime, monitor those distorted Greeks, because if premium rises, extrinsic volatility, let me rephrase that. If premium rise, extrinsic volatility will grow, and if extrinsic volatility grows, then the theta value will not show a distorted situation any longer. So then you will be able to have enough premium to do the roll whenever you see distorted Greeks again. You get my point? So patience is the game to play with the 70 put in this case. And with the call side, it's probably the same. So if I look at the call side, 85. So 85 on June 18. Okay, so we have theta of 6, an extrinsic value of 1.08. So definitely there is more extrinsic value than what theta suggests we can collect on time decay. Therefore, Greeks are not distorted. Okay, they are not distorted. And why is that? Well, because price is currently 82, which is relatively close to 85, and therefore, all is working the way it should. Okay. I am at 4 of June for the put and the call for expiration. Oh, you didn't roll using 18, Siderman. Okay, so then you need to roll. Okay, because let me see. So if you look at, no, you cannot roll. It's all distorted. Let me refresh what I said. What I said is nonsense. You cannot roll because, it's distorted all the way to July 9. So obviously June 11, which is what you would normally roll into, it will also be distorted. So your action here, Siderman, is simple. Let the 70 put expire, so you pay no commission. And once the 70 put expire on the next Monday, okay, when the market reopens, sell the 70 put on the next expiration date. And it's going to be distorted Greeks, but at least you'll get some premium. So you minimize the impact of commissions and the fact that Greeks are distorted, okay? Or you were looking at Option Station Pro instead of TOS. So you have the 18, right? So you are like us, using the 18. So if that's the case, then we are all good, okay, guys? So nothing to be done on AMD, and this is the final conclusion of the various actions that we have done, where all is working good so far. If you were to add up all the results, even for AMD, we are making $18 something. So all the trades are making some money. It doesn't mean that's a guarantee until the end, okay? But so far, it's a good beginning, and all is working according to plan. AMD is also teaching us a little bit of a lesson, in the sense that this is not a common situation where you got distorted Greeks every expiration date. We are just dealing with a very wide range, and the 70 puts being so far away, they are producing that distorted effect, okay? Which, again, it's a matter of playing that waiting game. Cool, okay, so let's continue then, okay? We're gonna continue. And we are now going to look for new opportunities. So I'm going to sort the opportunities from top to bottom, and I'm going to start with CHTR, Charter Communications, $688 stock. We are waiting for pending data. Earnings on July 30. So this is nice because we got plenty of dates available. We have UFOs above at least 2, UFOs below at least 2. And the problem is that, these UFOs are so far from each other, the green ones, that, unless we have good probabilities using pre and post market, we probably cannot do much here. Well, and we do have good probability, but also we don't have additional UFOs below. We only have UFOs above. So where we are on the monthly time frame, that stock is making all times high, and unfortunately we cannot do much. Okay, so I'm gonna move to Goldman Sachs and see what we have there. Okay, so Goldman Sachs almost making all times high, earnings on July 14. 41%. If we look at pre-post market, regular session is 57%. Goldman Sachs already started making all times high. There is no red UFOs, so we cannot do anything with it. MasterCard, we are in a trade already, so we leave it alone. And Zoom. So let me see what we have with Zoom. So first of all, with Zoom, we have 51%. So that is a good probability to see. With pre and post market, we have 44. So no pre and post market for Zoom. So we're gonna be focusing on 51.60. Okay, good. So now we have UFOs below, we have UFOs above. I may need to load more data. Okay, let me take a look at monthly time frame. Yeah, so we may need to load data, I don't know, let's say starting January 2020. Okay, so let's load data using January 2020. Oh, wait a minute, I didn't notice that it says no data available for earnings. So that is a concern. So let me bring TradingView to the mix. I'm just loading TradingView here so we can double check MasterCard, sorry, Zoom. Okay, where it seems that earnings took place on June 1st. Okay, so if that's June 1st, oh yes, June 1st, yeah, today is June 2nd. So yeah, remember, if I look at the daily time frame, we need to be careful here, okay? So if we look at the daily time frame and I load implied volatility of options, we have the value of 61%. Okay, so this is the value calculated at the end of the day of yesterday by TradeStation. And if we look at Zoom now, and we look at the option chain, and we look at what the values are, you can see it's more in the 40%. Okay, it's more in the 45, 44. In other words, volatility dropped a lot, and that has not been picked up by TradeStation yet, because TradeStation updates this value at the end of the day. So in other words, we may have a good setup, but the level of premium to be collected from Zoom, it's much less than what we want to find when we put these trades together. So in this sense, we're gonna pass and go for the next talk. This is something that you always need to be aware of when looking at that, okay? So with VRTX, we have multiple UFOs, 51%. Earnings are July 29. So this is looking much better for us to put a trade together. Do we have, let me see how much data I may need to load below price. So let's load data all the way to January 19. Okay, so we load data all the way to January 19. So we have plenty of data points on the chart. So January 2019. Okay, so now we have many more UFOs. Okay, with pre and post market, what do we get? 42, so that's not good. So we're gonna stick to regular session, and again we should be fine because we have many UFOs above and below, and we also have the opportunity to use expiration dates all the way to July 29. So in that sense, we should be okay. So let's take a look at VRTX. I'm gonna start with June 11, even though that would probably, wait a minute, if I look at June 11, I see serious lack of liquidity. So we're gonna have to focus on the monthlies. So I'm gonna use June 18, and even with June 18, yeah, I'm not that delighted. I am really not that delighted. Really not that delighted. You know what? Let's leave VRTX to the end if we don't find anything. I'm gonna check on DocuSign to see if that's better there. So DocuSign earnings on the 3rd of June, so that doesn't work. What about Libby? Okay, earnings on the 29. I'm gonna wait. I want to check pre and post market as well. Yeah, it will show the moment it's loaded, so we need to wait just for a little bit. Okay. How is it going so far, everyone? Okay, so we have it now. 42%, so that doesn't work with the pre and post market, so we need to stick to regular session data. There is only one UFO there. Red color UFO is only one, and we're making all times high, so we cannot work on that one. So we're gonna go back to NI. So good probabilities, UFOs above and below, earnings 723. So I'm curious to see the liquidity for that stock. First bad sign, to be honest, is that we only have monthlies, we don't have weeklies. Let's see. Yeah, I don't think this is gonna work well. Or maybe yes. Let's give it a try. Okay, so we're gonna take a look at NI. I'm just gonna use June 18 expiration, right click to analyze and sell an iron condor. Probabilities show us 76 and 69. So let's do that. 69 is more or less here. So style dotted. Okay. By the way, pre and post market is what? 44, so that's not good. So regular session is 60%, 59, that's good. So we have 69, 64, which is almost 70, and 76 point something, and 76 point something, which is here. Yeah, so the setup is good to use dark green UFO, okay, which is 69, as well as using this one, for example, which is 77. Okay, so 69 and 77. Probably we have 77 and a half. So let's see how much 77 and a half pay us. And it's only 12 cents. So this is not good enough because we need a minimum of 35. So what if I use the next expiration date, which is July 16? Earnings are on July 23, so I could do that. Now we get paid more. But of course, I don't think this is gonna work, my friends, because if I move to July 16, now probabilities suggest 78 and 67. So 78 mean that we are somewhere here, and that means that we need to use that guy, and that means that we need to sell options about 80, and the 80 options pay only 28. Wow, it's borderline, borderline, may work actually, because we could accept 25 or more if the other side gives us more than 35. So let's give it a try. So the bottom part would be 68. So 68 is here. Okay, do we have more UFOs below? We need to load more data. So we're gonna load data all the way to, let's do January 2020. So January 2020, that should uncover more UFOs below. Yes. And if we were to do that, that's not gonna work because the next UFO is located all the way down here, which is 62.5, and the 62.5 put will very likely pay very little. 62, there is no 62.5, we will need to move to the 60, which is 12 cents. Yeah, so not working with me. It was not looking very good since the beginning, okay, but I didn't want to leave any stone unturned. Thank you, Furmon. That's nice of you, my friend. Rolling along, like the detail. Thank you, guys. So we have Verizon here. So Verizon with very good probabilities. Wow, lots of drawing here. Let me simplify what we have on the screen. So earnings are 723. So July 23. We are looking to define a range. We got UFOs above and below. We also have pre and post market. Is also good for us to define the range. Is 54%. So all of this is good. Now, you have heard me say many times that with utility companies such as Verizon, often you don't get that much premium. So it's often very deceiving. But at the same time, if there is a moment in time where you get it, then those trades are very high probability because typically utility stocks tend to be quiet by nature. So the probability of staying in a range is high. So it's always worth it to check, especially since the pandemic, everything spiced up. So it's worth it to check. Before the pandemic, I would not even check because it's almost always a waste of time. But after the pandemic, to me, it's worth it to check. So 58 and 55 point something. So 58 is here. 55 point something is here. So if we pick two UFOs below, I mean, this is 1 and this is 2. If we pick UFOs above, this is 1, this is 2. This is the first one outside the range. But if we want 2, this would be the second one outside the range, even though the rule is not 2 outside the range. I'm just doing that because I need to check as well with a regular session. And with a regular session, so yeah, that would still be UFO number 1, and then that would be UFO number 2. Okay, so yeah, so it looks good for 59, and on the below part, it indeed looks good for that 54.47. Okay, so that would be the range, which is, you know, we are pretty well centered if we do that. So if we do 59 and 54.5, the question is how much we get paid for the 59. I would expect it to be very little. 59 pays 6. So what if we do June 18? The 59 pays 11, still very little. What if we do July 25? The 59 pays 18, still very little. This is what happens with utility stocks, guys. July 2nd, the 59 pays 24. So we need to go all the way to at least July 9 to accept this trade, where the 59 now pays 31, and it's less than 35, but as long as I get more than 35 on the put, I may accept it. Okay, so let's see. So 59, now of course I need to reevaluate the probabilities by changing this to July 9, and that tells me 60 and 53. So hey, 60 is beyond 59. So that means that now we are talking about this. It's gonna be tough, guys. 53.45 is here. Okay, so we are looking at this UFO. We are looking at that UFO. Okay, so that would be nice. with pre and post market, do we have anything? Not that one. This one, pre and post market. Do we have anything else? So we also have that one, which meets the rules. And below, we also have that one to meet the rule. But to be honest, just to be well centered. So 53 and 60 and a half, I think do the job very well. So let's take a look at how much we get paid for the 60 and a half. That would be 60 or 61. So that is 18, which is not enough. So that means that we need to go to July 16. And the 60 pays us 21. On July 9, the 60 pays us 15. So just a few more cents. 21. So that's not good enough. It's not acceptable, guys. It's not acceptable because we have a rule, minimum 25. We shoot for 35, but if the call or the put doesn't give us 35, we'll take 25 or more, as long as we get 35 or more from the other end. But in this case, it's 21, which is not even 25. So we just cannot do it. So I'm seeing today with Verizon a little bit of the normal pattern that you would see prior to the pandemic when dealing with utility companies. So yeah, so not looking too good. So then, my friends, from a non-directional point of view, no trade today. We got 4 minutes to go. So I'm going to very quickly look into a potential opportunity to be directional because of that possible all-time high breakout, even though we need to be careful because it could be a fake out. Okay. So what is happening with that stock? Wow, 12 out of 7. So that one we're not going to touch it. What about applied materials? Applied materials is 9 out of 6. Too late. What about Beyond Meat? Uh, 6 out of 5. So no. Bilibili. 10 out of 7, no. ITVI, I'm just looking at the climate. I'm doing it quick because we only got 3 minutes left. Okay, guys? So ATVI, 10 out of 6, no. BX, 12 out of 9, no. BHP, 1 out of 8. Okay, so this one, yes, but terrible probability, less than 50%. So we're not going to touch it. So we go for Alcoa, which is 3 out of 7. That's good. And we have a good probability. Okay, so this is looking interesting. So let's wait for the whole chart to load. And we'll see if we can plan a trade, which we can. That UFO coincides with 3882. Okay. Even though I just moved the band here, but you get my point. So earnings, it's 714. So wait a minute, we got 49% actually. Okay, was loading that. I thought it was more than 50. What about pre and post market? 44. Hey guys, we're not breaking the rules. This was looking great for a trade, but with 49%. We are not going to accept it. We need 50 or more to be directional. You are in CAT and UNP. Nice to hear, Ahmed. Great to see as well that you are doing your homework and finding your opportunities and running the process by yourself. So that's great, great, great. How are the trades working so far? So 4 out of 6, okay, so that could work with Blink, even though the UFO is so far down. So let's try to find something a bit more close to price. So far in the green, good one. BHC, it's exhausted in the climate. CHPT, 4 out of 4, that's valid. That is valid. We're at 61% so far, even though price is still loading. So let's see if I was to set a target, where would that be? So the target would be right here. Okay, so that would be 27.38. Okay, 27.38. So we are looking for a, you know, small move here. Yeah, I'm not sure it's gonna be worth it. Yeah, 27.38 is very, very little, very, very close by. Yeah. So guys, also we are getting into stocks, $21, $19, $15. The price points are quite low, and therefore the use of options is less advantageous than when the price points of the stocks is a little better, okay? You see 52% for AA with a 0.5 calibration. Got you. Yeah. I hear you, but again, it's all about being mechanical. And Christian, if you use 0.5 yourself, then go ahead and plan the trade because it's looking good. And realistically, I got 49 point something, so it's not that bad, isn't it? But at the same time, I need to show you discipline, because when I trade, I am disciplined. I don't break the rules, and since my calibration is 0.618 and my stats are below 50, so I cannot take the trade. Okay, but in your case, Christian, go ahead, and I would suggest that as a homework, plan the trade, put it together, and we are back tomorrow. So tomorrow, if you had any question or concern while putting the trade together, I'm happy to review it for you. So, you know, you can double check and reconfirm that your homework was done correctly. And, you know, that may be useful to you. But in my case, while obviously it's something I could do, which is, you know, kind of close my eyes and go for the trade, I'm not going to do it because first, I don't do it on my trades. And second, I think it would be a bad example when it comes to showing the fact that we need to be disciplined with our own rules. Having said that, it's okay for all of us to have different rules, okay? And, you know, calibration of 0.5 is valid, Christian, if that's your decision, okay? It's certainly a valid one. So certainly you have the green light to go ahead and take the trade in that sense. So, you know, run the process and we can talk about it tomorrow. Very good, everybody. Very good. You guys keep up the good work. It's good to see you as always. See you tomorrow, same place, same time. Take care, everyone. Bye-bye.